Welcome everyone, welcome. Scalpers trade management rules once again, because many of you asked it, so I decided to present it for a second month in a row. So Scalpers trader management rules today. And we're gonna focus solely on these rules today. So my dear friend, we're good to go. I'm gonna go through the disclaimer warning as usual. So allow me a few minutes to go through it. Anything you need, don't hesitate to comment on the question box that we have, and I'm gonna say it quickly and actually reply you on spot. So this webinar is being recorded, so you're going to receive the recording once we are done. So welcome everyone. Welcome once again. Disclaimer: this material is provided as general market communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors, as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objective and level of experience before trading, and if necessary, seek independent advice. So admin is out of the way finally. So more and more people are joining the session. Good. Anything you need, I'm here to help. Webinars@hfm.com is our email address. Don't hesitate to contact us, right? Anything you need, just send it over here in the support team. Myself and any analyst that we have on board will be more than glad to help you guys with anything you need. Not necessarily anything that has to do with the particular webinar topic, but in general, if you are facing any issues with your strategy, with your daily trading, share it with us and we're gonna do our best to help you. So so what shall we do now? Right now, today, basically, we're gonna go through scalping basics, right? We're gonna see what's the risks that you may face as scalpers and how to manage them. So simple as that. We're gonna go through these challenges, some rules that you need to follow in order to improve your scalping strategy and have an appropriate risk management to your trading. But before that, because I don't know how many of you are newbies, we're gonna briefly explain scalping. So so my dear friends, let's move on. So so I don't know how many of you have you ever said that, have you ever heard that there are no risk in scalping, and someone tells you that there is no risk? at all. If you ever heard something like that, this is just pure nonsense, by the way, okay? So in every single business, in every single business, even in trading, there is risk, right? So what we're trying here by educating you, by trying to help you learn as much as we can, is limit the risk that is out there in the market. Sorry, I'm sorry, something's wrong over here. So that's why I decided today to repeat this. Sorry, to repeat this webinar because we have a lot of clients that are scalpers as well, and I think this is for your best interest to go through it again. So let's start with the basics of scalping first, okay? What it is, just the very basics for everyone over here. By saying scalping, what is scalping? It's a strategy, okay? It's called scalping because it involves buying or selling, shorting assets for basically and actually buying or selling assets and exiting the particular position after a few minutes, either at a loss, either at a profit. But the aim of scalping is short, small, short-term positions. Okay, so as you understand, is a high frequency trading strategy. So multiple trades within the day in just capturing small price movements. So the time frame for a scalper is seconds to minutes, not more. So quick positions, and the open position from the exit level, the open level from the exit level will be just a matter of seconds or up to few minutes, no more than few minutes. Okay, so that's the aim of scalping, of applying a scalping strategy. Basically, the aim, what scalpers aim to do is to profit quickly from those tiny fluctuations. So that's why if someone is scalping, is a scalper, it's basically that indicates that it's holding positions for few seconds or minutes. Okay, so you can understand that it requires a keen eye. This approach needs someone that is alert, is paying attention to the details. It requires a pretty keen eye on the market and the ability to make rapid decision and be calm as well. If someone is stressed, or if someone is not is a person that cannot control his stress easily, especially under pressure, this is not the strategy for you, I'm afraid. So characteristics of scalping, as I said, is that it captures small price changes, small profits, okay, into large profits, why not, if things turn good. Time frame seconds to minutes, no more than that. Obviously, there is a high risk. The risk level in this strategy is quite high because of the frequent trades, and it needs really fast execution, really fast decision making, and it needs technical analysis tools that will be meaningful for so small, so short time frame charts. But the key Okay, what's key is that because this type of trading is a bit tense, right? And is stressful. It needs someone that is calm and someone that has managed to discipline himself. And obviously, it needs an appropriate risk management technique in place. So, okay, it's very demanding strategy, very demanding. It requires focus, it requires quick reflexes, dedicated persons, dedicated people, traders that, as I said, they are disciplined, traders that they are experienced, okay, as well, and someone that will be dedicated to be on top of the markets and monitor the markets through the day. It has some advantages, even though it's very demanding. It has some very, very important advantages. Basically, the primary advantage that this strategy offers is what I said earlier, the potential of for basically numerous profitable trades. So that's why it requires a constant market presence. Okay, so you see, we have some rules, as you have seen. No more than 5 minutes, right? Seconds to 5 minutes, small time frames, okay? Few pips trades, and also a really high speed, reliable internet connection. So if you are, and VPS service as well, dedicated VPS service. So if you're living in a country that faces some issues with the internet connection, or you're not you don't have a strong internet connection, or you're facing any issues with your internet, you need to think twice before applying or trying this kind of technique, this kind of strategy. Now, oops, sorry. Okay. Now, actually, because let me stick a bit on explaining the reason why we need a really reliable and speedy internet connection and dedicated VPN as well. So, because it's so rapid, it's so fast, right? Fast execution is crucial, guys, okay? So that's why obviously we are a company that offers fast execution platforms, so you don't need to worry from our side, but you need to make sure that from your side you have also what's needed, okay? Because otherwise, if with your internet or whatever, your PC, your VPS, whatever, if you are facing any delays, then that will cause a lot of problems to you. It will cause delays on order execution, and this is something that it will be a waste of your time and your money as well. So that's something that you need to think about, okay, and test as well. Now, okay, we are ready to start. I repeated several times that is a strategy that is because it has a really narrow time frame from seconds to minutes. As you've seen earlier, the maximum is 5 minutes, but just to be precise, more precise, and not just Okay, strictly speaking, okay, scalpers don't actually keep a position open for more than a minute. Okay, so the holding period ranges from less than 10 seconds to maximum 1 minute. Okay, if for any reason you see that you can the momentum might be too strong, etc., double checking everything though, you might consider holding it for a few minutes, but no more than 5 minutes. Okay, this is the main criteria, some of the criteria and characteristics of scalping. There are indeed other type of scalpers that they even support 15, holding a position that it might last up to 15 minutes. But this is something quite rare, okay? Okay, so especially if you're seeing that your position it is not supporting, basically your position is against the trend, don't hold it for longer just because you're thinking that it will revert on your benefit. Okay. So you need to consider quick exits if the price action doesn't support your trading idea. So if it comes against you, consider quick exits. Okay, monitor and again the market and take your next position, but don't stick or don't stick to the not greediness, but by basically to stick on your fears, and let emotions drive your decision and saying that okay, I'm losing, but it will revert. No, that's not that's not meaningful, especially for scalping. That's risky for scalping. Scalping requires quick actions. Is it going against me? Close it on spot. Don't think about it. If it's on your favor, wait for your target to be hit. If your target is far away and it lasts longer than it should, close your position. You shouldn't keep your position open for a significant time period. Okay, there are some scalpers. There are random ways to scalp, guys. Okay, there are, especially with regards to the time frame, there are some that aim to this fast, few pips trade, no more than a minute. There are others that they might hold it for up to 15 minutes. Not wise, but sometimes it happens. And there are other scalpers that they turn their position to intraday trades. This is quite wiser than the second type of scalper. Okay, if you have noticed that your position is actually considered to be the current outlook of the day, then you might consider changing your position to intraday trade. So that means to go higher. I mean, check and review, monitor and analyze higher time frames such as 1 hour and 4 hour chart to see if there is a trend developing, momentum is rising or falling, etc., to see whether your initial fast, small scalping position is actually a proper intraday trade by doing some adjustments, okay? Obviously, because when we are saying scalping, we are referring to near term, very imminent stop loss level, imminent target level, fast bomb closes. So if you have seen that your scalping position complies basically with the intraday momentum and the intraday picture of the chart of the asset, then you need to readjust your target and your stop loss levels, and obviously your risk and reward ratio as well, possibly the size of the position as well. Okay, just food for thought. Okay, now so let's move on. I'm gonna stick a bit on the mindset once again. I know that I'm repeating a lot of things, but these are crucial, especially for scalpers. That's why I'm so focused on explaining everything again and again. The mindset is really important. So if you are new here, if you are not so experienced, if you are not so confident, if you haven't managed to reach to an appropriate mindset yet, be disciplined, not get greedy, not get driven by your emotions, etc., then don't try for now, at least scalping, guys. Okay? It requires people that they have managed to control themselves, to control their limits, to control their emotions. And good or bad, this is scalping. Scalping requires a proper mindset. Okay. So a wrong mindset will just ruin you. Will just end up with losses. Nothing else. Nothing less, nothing more than that. Okay. It's crystal clear. It's a very demanding strategy, as I said, because it's fast. Small profits, but several profits, fast decisions. So yeah, so think about it twice. So as I said, if you don't feeling confident enough from that perspective, from mindset perspective, don't try it, at least not yet. So because let's simplify everything. A wrong mindset, guys, like that, okay, I'm special, I'm not like others, I learn quickly, I can manage, I'm not greedy, I will be able to control myself, this is nonsense. Who cannot control itself? Everyone cannot control himself, especially if you're risking your own money, right? Risking your own money brings emotions that you might don't feel in a daily basis. So don't think that you are any different. All of us, we are human beings. We are stressed. We sometimes act without thinking. We are greedy sometimes. We're afraid sometimes. We are all human beings. So don't think that you are anything special or better than others. If there are any traders that they have this mindset, they will realize with a bad way, unfortunately, that scalping is quite demanding. So the worst thing to do in scalping, especially, but in general in trading, is to trade blindly. So don't just check watching the price action. Even if it goes up, I jump in and I open a long position. Don't trade blindly. Make sure that momentum is supporting this direction. Check the previous candles, right? Don't trade blindly. It's very, very important. So, okay, obviously this is a long-term chart. It's not a scalping over here that I'm trying to point out. But what I'm trying to point out is that you need to be aware the overall direction, the long-term direction of the asset that you are about to scalp. Okay, so because you are a scalper, or you're trying to scalp to apply scalping strategy, doesn't mean that you don't need to be aware whether that particular asset overall in the daily chart, in the weekly chart, is trending or whether it's ranging. You need to be aware what's the overall direction of that particular asset. Is it in a 2 months upwards trend? Is it in a 1 year's downtrend? Is it in 2 weeks downtrend? Is it ranging for the whole year? What is it doing? You need to be aware of this, just to make sure that you might, if it's trending, for example, you might consider scalping positions, short positions on the direction of the trend, because this will just this knowledge will just strengthen your possibilities of being right. Also, scalping requires a plan, right? Requires plan. So basically, we pretty much started the rules, guys, over here, okay? Because if you notice, we highlight how important it is to stick on a particular time frame, seconds up to 5 minutes. That's the primary rule. The very first rule is that scalping trading strategy, it needs to basically it requires you to work from in a chart that ranges from 1 minute to 5 minutes. I have mentioned some cases that are scalpers that they keep it up to a minute. There are others that they keep it up to 15 minutes, and there are others that they might consider and change their scalping position into an intraday trade. But these are just to have in mind. The primary rule is from 1 to 5 minutes. If for any case you have seen that it might need to turn into an intraday trade, is a different story, okay? But the scalping as such should be ranging from a few seconds up to 5 minutes. No more than that, okay? No more than 5 minutes. There are rare cases with scalpers using 15 minutes, up to 15 minutes, holding a position up to 15 minutes. Second rule that I have just mentioned, you need to be aware what you're trading, the overall direction, because if it's ranging, right, you might consider scalping on the swings, right? Because ranging means that the asset is bouncing within a range, right? So you might consider scalping and opening position on any pullback that you might see at the resistance level or any rebound at the support level. But ideally, another basically important rule in scalping is to if you want to scalp in a ranging market is fine, but preferably use it's basically stronger in a trending market because it gives you the privilege to go along with the trend. So another important rule, guys, is to avoid going against the trends. Okay, if you're a scalper, then you need to follow the trend, not going against the trend. If the asset's price is rising, for example, on a minute chart, just buy it and then follow the trend. If the price is falling, then ensure that you have placed a short trade. Easy as that. Another important rule is to have a plan. Basically, that's for everything, every type of strategy. For everyone, for every trader should have a plan. Otherwise, without having a plan, without having prepared for his strategy and what he's about to trade the next day, then the odds of doing something wrong or end up your day with losses is quite high. So always be well prepared. Don't trade without preparation. Don't trade without having a trading plan that you have tested in a demo account, that you have written down, that you have combined yourself with predetermined risk and reward ratio, predetermined goals, predetermined stop loss levels, and etc., etc. So so don't trade without having a tested trading plan written down. Okay, every trader needs a detailed trading plan because it will cover basically that will save him from major losses, right? Will limit the any potential loss. So it's crucial. There are a lot of traders out there that they don't have a plan, they just jump in without any strategy either, or just they switching from a strategy to a strategy. That at the end will not work. Okay, they might be lucky in the very first few trades, but that eventually will not work. This is also a rule and a part of scalping management rules, to have a plan. Okay, so sit down on your PC at least an hour before the trading session, scan the markets, write down anything that triggers your attention, write down the trend direction per asset for the assets basically that you are interested in. Write down the markets that you are intending to trade in multiple time frames. Also, obviously, you need to have a setup for scalping in place, so particular technical tools that you have tested, and they provide appropriate signals in such a fast environment, such as minute charts. So you need to have your setup in place. and you need to be well aware regarding the mood of the markets. We are in a risk appetite a day? Is the risk on, risk off mood? Is it cautious sideways movements and etc.? You need to be aware of the mood in the traded markets, and obviously which events they're gonna release within the day and what time they're gonna release, because this on the time of the release you're gonna have significant volatility will be seen basically, and this might and you might basically want to avoid opening any position during the news releases. Okay, scalping for scalpers, it's better to avoid news releases, okay, because it will cause a lot of market noise, so it will easily kick the stop loss level instead of initially kicking your target. So so unless if you have created a scalping strategy that it has a proven record that it works for event trading, for news trading, then it's better to avoid news releases, okay? Okay, I'm gonna skip this one because we covered pretty much. So I'm gonna stick on the rule of having an adequate and strong trading plan in place, tested a plan with proven records, tested again and again, day after day, in a demo account, live account, etc., because it's significant. So it's significant because it will give you a lot of confidence in your trading, and as I said, it will increase your possibilities of profit and will limit your possibilities of ending up with losses. But other than that, also something that we haven't touched yet is the fact that you need to constantly learning, constantly practice different settings in your strategy, trying to adjust your plan, your strategy day after day, because things are getting different, right? And we are improving day after day, so you need to be able to adjust and practice day after day. This will only improve you as a trader. Sorry. So okay, let me just, something that I want to add at this point, let me just get back. Come on. Okay. So something that I want to, just a second. Sorry, just a second. So guys, I think I haven't covered possible indicators that you might consider using in scalping, but I'm gonna verbally say them at least, okay? So obviously there are a lot of technical analysis tools that you can use. Bollinger Band is quite nice for scalping if you want to consider it. Okay, awesome oscillator, quite nice as well. Moving averages, but because it's such a strong environment, you need to consider thinking actually using exponential ones, and also obviously quite short-term ones such as three period, 5 period, 9 period. Depends on your depends on your um, uh, asset and your time period. Also, the stochastic oscillator is quite nice for scalpers as well, because you can see the recent range of the asset price in relation to the current price, and you can also predict the turning points in value. But stochastic needs an adjustment as well. Maybe a short-term stochastic with settings 533 might be quite nice as well. So you need to play a bit with the settings to make sure that you are using the appropriate ones for the time frame that you are using, obviously. Okay, so Bollinger's, moving average, exponential preferably, and stochastics, awesome oscillator as well, are some of the indicators that work quite well with the for scalping, basically. Okay, this generally speaking. These are, if you use these indicators together, they work quite nice for scalping. Now let's move on. We have already mentioned how demanding and highly engaging scalping is. But I would like to go through some risks. Okay. So, my dear friends, some of the risk of scalping. So, one of the very, very important and actually a risk that we face very, very often is overtrading, which is a completely wrong thing to do, overtrading. So overtrading, obviously we are referring to when we are saying overtrading is having a significant amount of positions of trades, taking a significant big amount of trades per day. Okay, which it doesn't sound that bad, right? But it is, because even if the majority of those trades is winning, they're winning trades, they're profitable trades, even if they're profitable trades, okay, they are creating unnecessary costs, and I'm referring to trading costs, trading fees. Okay, so it's not as simple as, okay, I was so passionate, and I was so alert, I had a lot of energy, so I opened more than 100 trades today. It's not just about you feeling relaxed and you have a lot of energy, and no, it's not about that. You need to think about your trading costs as well, even if they are all winning trades, okay? Even if they are winning trades. If a trader makes too many trades in a day, other than the fact that you will be easily driven by your emotions rather than a sound strategy, okay, a significant this kind of trading basically increases transaction costs, increases risks, and poor, and it will easily lead basically into a poor overall trading performance. So this is a behavior that you should avoid, and this is a behavior that scalping could lead into over trading quite easily, because you get excited, and if the very first few trades are successful and winning, then you all this euphoria could be easily turned into over trading. But you need to have in mind that that if you start a rapid increase in trading frequency, I mean opening multiple trades, without no longer taking care of what is going on in the markets, what's the news, whether we have news releases upcoming, you don't care anymore about your strategy, about your setup, then it seems that something is wrong, you're losing it. Okay, so be careful. Over trading might cause, successful scalping might lead to euphoria, and so over trading, but you need to handle it. And how you can handle it: set a limit. Say, I'm not going to open more than 30 trades a day, 20 to 30 trades a day max. Okay, you need to set some limits in order not to let yourself into this kind of situation, because you need to think other than let's say sorry, other than the risk of ending up with losing trades. It's also the trading cost, the trading fees, the increased transaction costs that you will have to pay. So you need to put some boundaries. It's not so much precisely about a particular number of trades, but if for any reason you start doing trades, you start opening trades without trades that are not in alignment with your usual strategy and your setup, then this is the flipping point that you're losing it. You start and losing. This is a sign that you're losing it. Okay, so if you start noticing that you're no longer trade with alignment with your strategy, then stop for the rest of the day and come fresh the following day, because this will end up into basically this is a classic sign of over trading. So over trading isn't about or just about the numbers of trades, but it's also the quality of those trades. Okay, a trader who makes fewer but well thought out trades aligned with its strategy will likely perform much better than one who trades frequently on impulse, right? And as I said, I mean, overtrade is caused by euphoria or even from fear of missing out. That's also something that could lead to overtrade. Fear of missing out, or desire to recover losses quickly, or euphoria because you had a constantly in a row consecutive winning trades, and you're like, oh yeah, let's go. No, okay. Emotional decision is one of the things that causes overtrade. Lack of patience as well. Some traders struggles to to wait for an ideal market condition, and they force themselves to find an opportunity even if it's not there, even if they cannot see it. Also overconfidence, yeah, the euphoria that I mentioned earlier. And poor risk management is also something that leads to overtrade. So without proper risk controls, you can easily keep entering new positions and chasing profits or recovering losses without thinking properly and without having a risk management plan in place with particular profit levels, with particular risk and reward ratio, with particular exposure percentage in place, and etc., etc. So traders, and especially scalpers, guys, need time for recreation and relaxing. Okay, you cannot constantly open one position after the other without taking a step back, relax a bit, calm down a bit, take a coffee, relax, do something else other than checking your charts, and come in an hour back or 2 hours after, relaxed, in order to think better. I mean, to have a clear head, a clear mind, a mind in peace, and with this way you will be able to, with a clear head, you will be able to continue the rest of your day. So scalpers especially need time for recreation and relaxing. Our brain is created in such a way that it needs periods of relaxation in order to maintain its effectiveness in a high stress environment such as scalping. So 5 to 10 trades a day are more than enough. Okay, basically obviously it's up to you, but as I said earlier, if you start seeing your trades are not in a line with your setup and your strategy and your trading plan, stop. Also, it's quite important to pick the right assets for you, especially for scalping. Okay, following these rules regarding sorry, having and following rules regarding using short charts, not more than 5 minutes, always have a risk management strategy in place, always cut your losses as soon as possible, always follow the trend and not going against the trend, always have in mind the overall momentum of the overall picture of the asset, etc. is important, but also important is to find appropriate assets for scalping. Okay, before you use a scalping strategy, it's vital to understand the meaning of liquidity and volatility and the pros and cons, the advantages and disadvantages of this trading style. Okay, so because sorry, so what you're asking, okay, so liquidity and volatility are two of the most important concepts in financial markets. Okay, and basically we are referring, simply saying, so basically, for example, the volatility basically is the amount of price movement over a certain period, right? So higher than normal activity, it leads, actually, it's called its name, a volatile market. It's causing a lot of volatility if there is a higher than normal activity in the market. Liquidity is how easy an asset can be converted into cash at its current market price, basically. So with the volatility, basically we are measuring, we are seeing how drastically a market price changes. So if it changes too fast, we're saying that, oh, that's a very volatile asset. Right now there is a lot of volatility in the market. With liquidity, we are referring to how active a market is. So that's the total volume that they are trading. So whether it's liquid, high in liquidity, high in cash. Okay, and forex market obviously is the most liquid market in the world, basically, because more than 7 trillions actually are traded in forex market in a daily basis. So liquidity, guys, is what is what is fluctuating the financial centers around the world. Okay, so yeah, forex market, it is a liquid market. So sorry, so it's wise to choose assets that they have a high liquidity. They are high in liquidity. So let's move on. Come on. Why you should choose assets that they have high liquidity? By saying high liquidity, by the way, obviously I'm referring to forex currency pairs, right? They are the most liquid assets, but also cryptocurrencies and stocks. They are the number 3, the top 3 that they have a high liquidity. They are highly liquid, let's say, assets. So for scalping, it's wise to choose assets that they have high liquidity, and the reason for that is because assets that they are highly liquid, they tend to follow the laws of trending market better and ranging market better. And remember, with scalping, we don't avoid trend, we follow a trend. So that's why you need to choose wisely. So for example, don't choose pound yen. It's a very volatile asset. So very, very volatile one. So it's not preferable. Preferable for scalping, they are the majors. Why not? Euro, dollar, yen, cable, Aussie. Not so much pound yen, as I said, because it's very, very, very volatile. Actually, is the most volatile asset in the market. So what else? Also use scalping is also about proper timing. Scalping is most successful when markets are volatile, not though during data releases, okay? Events releases. Because there, we don't only have volatility, we have sharp, really, really high volatility that it might also be in the wrong direction. So that's, I'm not referring, okay, highly volatile markets, but avoid news releases. Some examples is pound yen, Aussie yen, pound euro. Mexican peso is quite nice as well. It's quite volatile. So that's quite okay as well. we said about attention to detail. If you're not that kind of trader, then scalping might not be something for you, and it's someone that has a keen eye. So these are some of the usual risks actually, or mistakes that you shouldn't do, such as for example, someone prefers to trade and then to check the results at the end of the day. No, you need to review again and again and monitor what you're doing, because if you're doing something wrong at the beginning of the day and you continue the same thing again and again the whole day, then you're gonna basically repeat losses after losses after losses after losses. So that's not a wise thing to do. Risking too much also, I mean, high number of trades and demanding working environment with high gearing means that the chance of making mistakes going up. So think twice before you you use a really high leverage. Simple, because it's simple math, guys. Okay. A big, I mean, if you use a really high leverage ratio in one trade, that single trade might lost the 50% of your whole account. So it's pointless and mentally very difficult as well, because it will cause a lot of fear and a lot of stress as well, and you will not have a clear head to think and proceed the rest of the day. Also, why should I worry about daily charts? I'm a scalper. Nonsense. You need to be aware of the overall trend, is what we mentioned earlier, but not only about overall trend, but also analyzing first the daily chart, put some support and resistance levels in the daily chart, because down in the 1 minute chart, you might spot an opportunity and jump quickly once you saw that this major support or resistance was broken. Okay, because in small time frames that keep on constantly selling short against major supports are fighting against the probabilities. So the same applies to those that always buy at major resistance level. Putting things in action, create a routine. We have already mentioned that again and again. Have a plan. Have a plan in place. Sit down every morning before the open. Check your scan your charts. Write down anything that triggers your attention right now. Write down anything that you want to trade within the day. Write down your trading plan, write down your strategy, write down your setup, your rules, and follow them day after day without changing anything. Adjusting is okay. If you notice that you're doing something wrong and you need to readjust your plan, that's fair enough. Excellent. That actually helps a lot. But stick and keep your trades in alignment with your routine and your plan. So some pros and cons. Obviously, it magnifies gains with leverage. It's a quick environment, open and closing positions quickly. You can trade on hundreds of forex pairs. It reduces losses by holding positions for a short time frame, but it's also having some disadvantages. With leverage, it also magnifies losses. So that's why cut it short, guys. Cut it short. Could potentially wipe out small wins with one large loss. So try to keep small to cut it short again, basically, to cut losses short as fast as you can. The risk is also to risk your money on a highly volatile market. That's why a risk plan in place is necessary. And it's quite slow because you are gaining profits, small profits within the day, but that's actually a benefit as well, because with this way you're reducing losses as well. So that was pretty much it. So it wasn't about scalping strategies. We're gonna go through scalping strategies next month. It was solely about the right way of being a scalper. It was all about emotions. It was all about dangers. It was all about being prepared for scalping, not so much about actual scalping. So yeah, that was pretty much it, guys, for today. So scalpers management rules. Thank you so much as well. Take care. Have a great day ahead. I'm gonna see you again next week. Actually, next week it will be a gigantic week, so I advise you to get well prepared over the weekend for next week's session, for next week's trading session, because it's packed with events. If I say packed, it's full. It's earnings as well. And actually the next 2 weeks are expected to be the most volatile this quarter. So do some homework, go through your daily and weekly charts, find out your key support and resistance level, set some trend lines, check whether there are any patterns. Do your homework in order to be well prepared for Monday. Okay, thank you very much. Have a great day ahead. Take care. See you again next time.